All right. Good evening, everyone. Thank you for tuning in. Tonight we are recording. The video will primarily be on the presenters. So just wanted to give you a heads up that this session is being recorded. And if you do not want to be recorded, you may disconnect at this time. And I am Shawanda Robinson. I am here with Amani, and we are going to give you a few tips on how, as a self-employed professional, to buy a home. Um, a little bit. What happened is I've had a few clients that are self-employed. I am, of course, self-employed myself as a realtor, and my client, my makeup artist, talked to me about how when it comes time for self-employed people to get a home, that they're unaware of the things that they needed to do prior to wanting to get a pre-approval. So this is how that came about to help individuals such as myself, such as my makeup artist, such as all types of different individuals who run businesses, get a house when they are ready to do so. So, Amani, do you want to say hello?
Sure.
Let's see. There you go. I think you're on.
Okay. Can you see me now?
So I lost my video somehow, but I hear you. So hopefully you're on. I see you. Everyone sees you. If you can see her, just give us a yes in the chat really quick.
Yeah. Thank
Yes,
you. And I
see.
do see the video on.
Okay,
Okay.
perfect.
Well, good evening, everyone. Thank you for tuning into this webinar. We hope to give you some wonderful, meaty, and juicy information. As Shawanda alluded to, my name is Amani Ahmed. I'm a practicing CPA right outside of Washington, D.C. in Lanham, Maryland. And there, there's always a challenge as a business owner or self-employed professional attempting to purchase a home, and we get a really we typically have a really bad experience. So our goal is to just kind of tell you what you can expect and put you in a position where you're financially kit ready, if you will, to purchase a home, so you don't have as many hiccups as an average self-employed professional does. But I'm glad to be with you this evening. I'll give it back to you, Shawanda.
Okay, perfect. And I'm gonna just say Google real quick. Okay, so mm-mm. All right. So today, what we're going to discuss, we're going to talk about the successful home buying process, what you will need to know, as well as the best practices for self-employed buyers, financial preparation, and your guide to doing that. And we'll have time for Q&A as well. It's not letting me spotlight the video for some reason. Weird. Anywho, okay, so a little bit about me. I am a native Washingtonian, born and raised in Petworth, DC. Want to admit someone. Born and raised in Petworth, DC. In addition to being a realtor, I um, I love to. Oops, want to meet someone. Okay. So, in addition to being a realtor, I enjoy cooking. I enjoy interior design, which is how part of the love for real estate happened. Prior to real estate, I worked at NASA for several years, and decided that I wanted to do something that I was more passionate about in life, and decided that I've always loved and wanted to do things with houses. I had invested before, and I decided to become a realtor. So that was 5 years ago. And one of the biggest things that I love to do is helping people find a house, as well as changing futures. A lot of people want do things. developed generational wealth, did several investments and things of that nature from buying houses. And I think it's one of the best things that you can do if you know how to leverage your home properly. As a I haven't bought a house as a self-employed person. However, that is what I'm getting ready to purchase, another house. So I want to, this is also informational for me as well, to make sure Amani is my CPA. So she's guiding me on through the right steps as well. So this was another part that was personal to me too, because I, as a self-employed person, am getting ready to purchase another house. And I need to make sure that my everything is in order, which is why I have Amani. So that's a little bit about me. We can move to the next slide. And so just want to give you a little bit as far as when you're prepping to buy a house, things that I do as an agent for my clients. I educate you about the market. I let you know, of course, we don't want you to pay more for a house than what it's worth. I don't also want to let you know what houses are going for, and always try to get you to match your wants and needs to your budget. That is something that's very important. I definitely find out what types of homes you're looking for, and take you to those types of houses. I don't want to take you to things that are not going to serve you and your family best. So if you're say, hey, I want 3 bedrooms, I want 2 bathrooms, I'm not going to take you to a 1-bedroom condo. It's about finding out what your specific needs are for you, or you and your family, and narrowing down the houses that most closely match your needs. As your agent as well, I coordinate the work of other professionals, similar to how a coach does, I would say. When you start with your realtor can connect you with other professionals that they know are going to give you the best experience. As your realtor, yes, you are free to choose whomever you want for your realtor, your lender, your title company, your home inspector, all of those things. You are definitely free to make those types of choices. But however, as your realtor, I have closed with several lenders. I understand their communication styles. Your realtor and your lender can make or break your experience in buying a home. Those are most of the time the people who will make or break your experience. As far as lending, that can be a challenge, because you don't know if you just decided to pick someone, whether they do or do not close loans on time, whether they actually will close your loan. And it could be quite stressful if you cannot communicate with your lender, because that is, if your lender won't give you the money, you definitely won't be getting the house. So that is why I have, over these 5 years, I have built a great team of lenders, and they work with people in different types of situations. Some people may take buyers with not so great credit. Some people, you could only have the best credit, but you may get a better rate. So I can also pair you with a lender based on what you tell me about your situation. I never will see your financial information. That is what the lender sees. But if you give me some basic information, I can kind of understand where you may need to be placed, and also what lender will fit your specific personality type and your needs. As well as negotiating on your behalf, meaning that I would write all of your offers. When we have home inspection, all of those things, I will negotiate on your behalf and in your best interest. I definitely work to resolve any problems that come up. A lot of things can come up in a transaction, whereas I will not always involve you in every single piece, because there's thousands of things that honestly happen, and to not overwhelm you with the process. So a lot of times I will be working to fix things prior to you even knowing that they're happening, or that they even happened, if I can resolve it without having to put that on your plate. Because in addition to you buying a home, you're running a business, you're you have your family, you have your personal life, you still have a whole lot of things going. So it is my job to try to minimize the amount of stress that you have in your transaction, because it can be pretty quick. So, any questions about that, or any questions so far about anything that anybody has? You can raise your hand or put a message in the chat box whenever you have those questions, and we'll try to get to them as soon as possible. Otherwise, Amani, next slide, please. Okay, and so as your agent, everything that happens with your realtor, and as far as your home buying transaction, is in writing, and that's the only way that things are enforceable. So this is what's called a buyer agency agreement. An agency is basically just pretty much what it says. Agency is a business relationship where the principal gives authority to an agent. So if the principal is my broker, gives authority to an agent to act on that behalf. So my broker appoints me to work with you. Although me and you start working together, my broker appoints me to work with you. And what that means as far as agency, that means that I am going to give you my loyalty. I'm not going to tell people about what in the ins and outs of you personally in your business, and telling them well, I can't, I have to keep your best interest at heart. It's kind of like a lawyer agreement in a way. I'm not able to disclose things about you that would, to the seller or to other parties, that you have not asked me to disclose. So I definitely have to have reasonable care and diligence, and also I am held accountable to trying to make sure that you have the best experience ever, and that you want to buy more houses, you want to refer your friends and family, and that you have a great experience with me. In the buyer agency relation agreement, it spells out my responsibilities, basically that I'm going to do my job as far as finding you a house that's suitable for you, a house that you like, and do everything to keep you abreast and aware of what's happening throughout the process. As far as your responsibilities are that you would work with me, and that you would call me when you have questions about a house. Like when you're riding down the street, sometimes you may see a house, and instead of calling that agent, you text me, call me, say, hey, Shawanda, I saw this house on Georgia Avenue, or wherever, and I like this house. Can you tell me more about it? And then I, as your agent, find out more about the house for you. That is because being an agent is actually a full-time job. So if you start like calling every single agent on the signs and stuff that you see, it can again be pretty tiresome, and you can run around in a bit of a circle. So that is the other thing. And every agreement has a beginning date, and of course an end date, and it also spells out the terms of termination. If we are not under contract on a home, we may terminate the agreement at any time. If we're not working out, again, I want my clients to always have the best experience, and they want to work with me. And likewise, sometimes people do not mesh. It is what happens. So if we are not a good fit, you say, hey, Shawanda, I do not, this is not working for me, and we go our separate ways. I will not attempt to hold you hostage. I will not attempt to make you stay in the agreement with me, or any things of that nature. When you do purchase a home as a buyer, sellers normally pay the commission on the homes. and as well as you would pay what is called a broker fee, and that is for things like paperwork, all of the paperwork that we will put together and different things that is paid to my brokerage, which is Keller Williams Preferred Properties. That is a fee that's $225, and that is paid at closing. If you do not close on a home, I'm not going to ask you for $225. We're just going to go our separate ways, and you don't get a home, or if we terminate their agreement. So that is agency. You can next slide. Thank you. So I'm not going to go, I'm going to just give, this is just an overview of the home buying process. Once you have finished number 2, I would go into number 2 on this list. I would go into more detail on every single other step. So number 1 is selecting a real estate agent. And the reason that I say number 1 is picking your agent is because, again, to make your experience the best experience, you want to have an agent that knows people that are going to come through for you when needed. Because what is not good, and what has happened to a few of my clients who have selected lenders that they were not certain of, or just randomly selected a lender, because of course there's thousands of lenders, just like there's thousands of agents, but that doesn't always mean that you're going to have the best experience with whomever. So I've had clients who have absolutely decided to stop even purchasing a house because they've had such a horrific experience with a lender that they like randomly selected. So that is has been experience that I've had with a few clients. Again, I work with professionals that I know when they say such and such is approved, they are approved unless things that happen, that things like, say, maybe losing a job, things of that nature. But once they have reviewed income and assets of a person and they haven't made any changes, I have not had the experience with any lenders that I have recommended thus far that my clients were unable to close on the house. And that can be devastating when you get to the end of a process that you've done a lot of work in, and then all of a sudden you're unable to close, and you've done everything on your end. So to alleviate that, I definitely attempt to connect my clients with great professionals. Number 2, as far as obtaining financial approval, that is, Amani is going to cover that more on the next slide, because that is why we're here, to get our bosses approved, and your process is just slightly different than the things that are needed to get there, are slightly different than people who are work for are employed, not self-employed. So the next thing after you go through Amani gets everything together. I find a lender that give you a lender to work with. The next step would be for us to do a buyer consultation, so that I could find out, okay, you were approved for, say, $400,000. You want to live in Temple Hills, or you want to live in Clinton, or you want to live in DC and purchase a condo. Whatever those things are, whatever goals that you had for yourself, we will go over that as far as what 400,000 gets you in different areas of the city. Of course, we know in every place that you go, 400,000 can get you something differently, a different thing. Some places that's an entire single family detached house. Some places that's a 1-bedroom condo. Some places that's a studio. Some place that's, if you have desires of certain places, 400,000 will get you nowhere. But I'll have to find out what your needs are as far as your family is concerned, and as far as what your budget is. And we have to match your budget to your expectations, because $400,000 will not get you a single family detached home in Kent or Woodmore or things like that. So we have to, again, set your expectations on your budget on the same page. And we do that, and we talk about also all of these processes in depth, and you are able to answer all of your questions, address all of the questions that you may have about the process during your consultation. Then from there, we say, okay, well, I want 3 bedrooms and I want at least 2.5 baths, and I want that to be in, and it can be a townhouse in Clinton. So we say that, and then we'll select properties. I'll begin to send you properties that closest meet you the match of what you have said that you wanted and wanted to find in the areas that you want to find. It's best to, sometimes you have a broad range of things that are available to you, and then sometimes it will be, okay, if you want these things, these are only the areas that your budget takes you to. So again, we'll select properties that match your budget and your expectations. And then once you start seeing properties that closest match your what will work for you, we will begin to see those houses and view those properties. Um, in the wintertime, like now, it's a little bit harder to show. You can't show houses as long as you used to because it gets dark so early. So if you are a backyard person, right now, this time of the year, we need to get out before 5 o'clock and see houses. If you are okay with not seeing the backyard, we can do it a little bit later, but we will go and view properties. And once you find the house that you like, you will write an offer on the house. Oops, sorry. Once you find the house that you like, not you, we will together, we will discuss your offer, discuss all of the terms of your offer, and then we will write an offer for you to purchase the house, and then I would submit it to the seller's agent. Sometimes the seller will accept the offer off the break. Sometimes they will come back and say, can, instead of you closing in 45 days, is it possible you can close in 30 days? Instead of offering 300,000 for the house, could you offer 310 because I have another offer, but I like your offer better for whatever reason. So that is the negotiation process. And then we discuss anything. If the seller does want to make any changes to our offer, we would discuss them again. And then you have the right to say, yes, okay, I'll go with those terms, or no, let me that's okay. So in the event that we get through the negotiation process and you are like the terms, we will move forward with the contract. And then we will do what's called in number 9 shows all of the different contingencies that happen. Your lender will work with you, your lender and your title company works with you to resolve these contingencies. Everything within your contract is contingent upon something. So one is the inspections. So we have a set amount of days that we write in the contracts for you to have your inspections, as well as if we need to cancel, we have to do that in say 5 to 7 days. Normally, that's where I normally keep my inspections so that you're able to get all of the inspections that you need or want. So we do that in 5 to 7 days. Home inspections are things, of course, like checking on your systems and all of that, checking on the different systems in the house, like your electrical, your HVAC, water heater, your appliances are working. So we would work through that, and that's one of your contingencies, as well as the appraisal is another contingency. Whatever we've written our offer at, we want it to appraise at that amount. Or higher. If it appraises lower, then we have to ask the seller to reduce the price. And then that is another renegotiation period because the seller does have the option to not do so. And the other things as far as having title insurance and researching the title. So if you've ever purchased a car from someone, if you ever purchase a car from someone, you all know that there's a title. The title has to be clear. Everyone who's on the title has to sign off on selling the car to you, or you can't get your tags, or you can't, whatever that is. So similar to that, that's the same way how it is with the house. It has to have a clear title in order for the lender to give you money. After you've cleared all of these contingencies in number 9, you are what's called clear to close, which means that all of these conditions, everything has been met, everything that the lender has asked you for, you've provided. and you may close, and then you go through what's a final walkthrough. You want to make sure that the house is still standing, that it's not any, nothing has happened. They haven't removed, you had stainless steel appliances and we come back the day before closing or the day of closing, and now they're white appliances or no appliances, things of that nature. So we just walk through to do that. And then you close on a home. I know that may have been, that's the abbreviated version. And like I said, I will go more in depth once you have your approval. I will go more in depth on every step so that you understand the process, because that's very important, because it does move pretty fast, but you still want to know exactly what you're doing and why you're doing it and feel comfortable. And so after that, you are a homeowner. Okay, yes, thank you. You can go to that one. And so just a couple of things that are very crucial once you have obtained your approval, is to not buy a new vehicle. Do not do not miss any payments. Do not get any collections. Do not transfer any balances. Don't open any new credit cards. You want to remain, when you get your pre-approval, you want to remain at the same level that you were approved at, instead of doing anything differently, because credit is a very tricky thing. Sometimes if you pay certain items off, depending on what they are, it could be more damaging depending on what type of item it is. Sometimes people may pay a collection and you may pay the collection off, but it may have an adverse effect on your credit. Before you do any moves with your credit, you should definitely refer to your lender before doing any of these things. Definitely do not co-sign for anything. Don't get any furniture on. Sometimes, they like, oh, well, you can buy the furniture and then you don't have to pay for 5 months or next year. Don't do that either. So don't do any of these things. Stay at your approval letter level, whatever you got approved at, stay there. So I just wanted to mention that, because this happens a lot. I am going to mute someone. Okay. And so I just wanted to give you that this, because this is very important, because this can, if you do certain things, your loan can be in jeopardy. Because if you say go get a new car, then that means that's money that you could have been putting towards your house that you now have to put towards a car. And that's something that affects what's called your debt to income ratio. And that can disqualify you from being able to get a loan. So we want to give those tips. And I think, do I have anything else?
No, that is it. Wonderful job, Shawanda.
Thank you.
I was thinking about the whole number 9 piece, getting through all the contingencies. And I normally hear from clients at 2 phases. At the onset, when they're trying to get the pre-approval, and then right there with clearing the contingencies, where they need the CPA letters and all of that, updated profit and loss statements. So definitely know that time or that step can be a hurdle to get through. And it's like anything imaginable that you can think of that can go bad on a loan typically just does. It's crazy. I don't understand why, but buying real estate is not for the weak-hearted, for real.
No, it absolutely is not for the weak-hearted. You definitely need to make sure that you have someone that knows how to get through. And another thing, I do want to mention, sometimes your lender will ask you for a lot of documents. They may ask you for some documents that you just gave them. They may have asked you for something that you like, I just gave them this. Well, they want to, sometimes they ask for things over and over again. You have to remember that you are getting hundreds of thousands of dollars. Sometimes you're getting $1 million or millions of dollars from someone. They are going to ask you for everything else. Like, they don't ask you for your blood type and your firstborn, maybe. Other than that, they're going to ask you for a whole bunch of things. And it's not you, it is everyone, because there's hundreds of thousands or millions of dollars involved. So they do everything on their end to make sure that they believe that you are going to actually pay them back those hundreds of thousands or millions of dollars. So yes, because I heard people, why are they asking me for this again? I just gave them this and I just this. And I'm like, it's not you, it's not personal, it's business. And it's okay. Just give them what they want and so we can get through this.
Yeah, that's a good point. That's
Yeah.
a good point. So
All right.
thank you for all that wonderful information, Shawanda.
You're welcome.
And I get to talk about the fun stuff, the finances and taxes,
Yes.
everything everybody tries to avoid or so. Once again, my name's Amani Ahmed, and I am a practicing CPA right outside of Washington, D.C. I'm licensed in Maryland and Virginia. But generally, if you're licensed in one state, you can practice in all 50 states, in which I do. So I have clients abroad as far west as California, as far as north as Chicago or Illinois, Texas, Florida, Pennsylvania, New York, you name it. And we actually are international. So we do have some clients in Trinidad, France, the country of Chad. I have a client in Abu Dhabi. So just really fortunate to work with a different array of clients, and what we primarily specialize is in tax resolution, meaning that if an individual or a business owes taxes and they're unsure how to handle or how to resolve it, um, or they have mitigating factors in terms of what got assessed, they'll reach out to us and we'll kind of assist them and represent them and get their tax debt resolved or into some payment agreement or something like that. And we'll touch a little bit on that in the presentation. We also do bookkeeping, so we help our business owners, keep track of their income and expenses. And we also do tax planning meetings around that and business consulting meetings to ensure that they're in a position where they're consistently growing and in a position to expand while increasing cash reserves. We do personal and business tax preparation as well as incorporation services. I've been practicing over 20 years. I've had AGA Group, which is my tax practice, for 13 years now, and it's been a fun ride. I really get pleasure out of seeing business owners prosper, see them from infancy stage, and then, over the years, how they mature and grow, and how that creates a good lifestyle for their families. So it's so self gratifying to be part of that process. So that's a little bit about me. Um, I will give you guys like 30 seconds to a minute before we go into my presentation. Just if you want to grab some water or grab a notebook, because, like I said, the finance and taxes tend to be a bit much. And I definitely wanted to make this presentation as effective and impactful to you all as much as I can within the limited time that we have. So I'll go to the next slide and then kind of give you guys like several seconds to get yourself situated. Okay. So as we can see here on this list, it's financial best practices. And where we want to look at first is, where do we start? What Shawanda shared was a lot of information in terms of tidbits about the home buying process, but everything kind of is contingent on your finances. And most people, when they decide to purchase a home, they may hear from others to purchase a home, or from the main media, hey, it's a good time, interest rates are low. But the best place that I advise clients when they are considering to purchase a home is to do research, have conversations with experienced realtors such as Shawanda to understand the purchasing process. Have conversations with financial lenders because they're all not alike. Even have conversations with financial professionals such as accountants, tax preparers, and CPAs. And everyone is going to have their opinion, and that's a good thing for you, because I see too many times that business owners kind of take the position as if they're self W-2 employees and they can just run out there and purchase a home. And unfortunately, that is not the case. That fact pattern does not fit most self-employed individuals, or small business owners. The truth of the matter is that you want to have it as a strategy or a strategic process for purchasing a home. So just like within your business, there was a process for you to begin your business. And this is the same thing with purchasing. So you just don't want to get this idea or someone tell you, hey, it's a great idea, go buy a home, and then boom, you go out the gates running. No, I generally tell clients to be in the best position possible to purchase. You want to give yourself 12 months to 24 months. And I'll touch on some of these as to the why, because as business owners, we have reasons that we're not necessarily in a good financial position with going to purchase one as soon as at the moment we want to purchase. So timing for purchasing, and this is really for anyone, I normally say advise clients to look at the beginning of the year or their first quarter or second quarter of the year, especially if they're taking out a mortgage, because to get the benefit of owning your home, you essentially want to have the ownership for as much as the whole year as possible to be able to write off the real estate taxes as well as your mortgage interest. And in your initial year of purchase, if you paid any points, you do get to deduct that upfront as well. So purchasing, beginning of the year, Q1, Q2 is normally the best time to buy. Current financial status. So some of the things that lenders kind of look at and you want to consider when you're taking the initial steps with getting pre-approved and approaching lenders is, what capital do you have available? Is there any particular savings as far as business as well as personal savings? The next thing that's a huge thing is business liquidity. We typically want to show, or most clients want to show, one, tax returns, very low income. And there's ways that you can do that and still get financing, although that's a harder hurdle to get over. But the most important thing that a lender is going to be looking at is, are you actually having some level of disposable income? Is there some kind of net income from your business after you pay your business expenses? So that is a huge thing. And then the next thing they may want to know is your asset. Are you in a position where you have assets that exceed your amount of debt, or is it vice versa, or you may not have any assets at all? So these are three big areas to consider when looking at purchasing. But the main one is the business liquidity. That has to be there. The other two, those are not necessary types of things, but you have to be making income from your business in order to get qualified. The next area that you want to look at is where you at with your taxes. Are you current? Are you behind? Do you owe? Or if you don't know, then I strongly suggest considering, requesting your transcripts. That link there is for individuals. You can also get transcripts for your business just to ensure that you have all your tax returns filed. because the worst thing that you can do is, here it is, you feel that you're ready, you got money in the bank, business is good, you go to a lender to get pre-approved, and they want to see tax returns, and you even provide them tax returns, and this has happened more often than not, is that for whatever reason, your preparer or something, they did not get filed with IRS. So when your lender goes to verify that your returns have been filed, um, and they use the same tool, getting a transcript, your returns is not on record. And then there goes the process of actually having to file and wait. And by this time, you could have been in a position where you have a home and you're looking to make a move or do a contract. So it's important to do the necessary things such as this before you talk to a loan officer to get that loan the pre-approval. And then the last thing I'll say, depending on your business level of activity in which you do, you may have the need to hire outside help, such as a CPA or bookkeeper, and or tax preparer. So definitely be open to receiving that, and or being open to hiring those types of professionals to help you get into a place where you could get pre-approved and actually purchase. So here on this slide, one of the biggest parts or integral parts with getting financing is a business accounting and bookkeeping. So if you have a formal accounting software, or you have a bookkeeper or CPA that handles your book, great. Even if you do it in an Excel spreadsheet, that's great. But if you do not, it is going to be important that you begin having some formal accounting system in place. So the way it works is that you have various types of softwares that could sync to your bank accounts, your credit card accounts. And when they do, you can go in there and categorize what is income, what are expenses, and so forth. And the accounting software will maintain this activity over time. So as long as you're going in there, or your bookkeeper or CPA is going in there and cleaning up those numbers and making sure everything is reconciled, everything it looks good, at any time you would have access to the necessary financials that you would need to get pre-approved, or even during your home purchasing process. So I just listed a few accounting softwares that are out there. QuickBooks, QBO means QuickBooks Online, Zoho Books. Bench is not an accounting software. It's actually an outsourced bookkeeping company, and their rates start at like $199 a month, and they'll reconcile your books. And that's all they're doing. They're just keeping your books for you. The other type of accounting software out there is FreshBooks and Wave, and there's so many others out there. And most of these do require a minimum monthly charge, a subscription fee, but it's so well worth the investment. I know this is not a tax compliance or tax collection presentation, but this really does help if you were ever to get audited by IRS or the state, that you have some form of accounting of your activity. Record keeping is also part of this arena. And what that means is that you have a place where you're keeping records of your bank statements and credit card statements, invoices, especially unusual purchases or large dollar item purchases. So I normally recommend clients to create a cloud folder for their accounting. So if you're in like iCloud or Dropbox or something like that, you have like an accounting folder, and then you have a subfolder by the year. So 2020, and within 2020, you have all of your PDF or saved PDFs of your credit card statements, your bank statements, and so forth. They do come in handy during your home purchasing process, as well as your um, pre-loan or pre-approval loan process. The last piece is the financial statement preparation. So one of the benefits of having an accounting software is not that it's only keeping track and maintaining your income and expenses from your business, but it's also allowing you to create certain financial statements that represent how your business is doing. And we'll go into those specific statements in a few slides, but being able to create financial statements for your lender and during your home buying process, it's going to be a huge thing. And it is going to be something that you would require. And generally speaking, you can get that out of your accounting software. However, I will say I know we're doing residential purchases here. I have seen where, in very little instances, where the lender or the underwriter would like to see certified or CPA signed financial statements. Generally, those types of requirements come in when a business is looking to purchase a commercial real estate. So here I just want to just touch really briefly on, a little bit more about tax compliance, some ways of possibly reducing taxes, and as a business owner, the compliance piece of perhaps having to pay tax estimates. So generally speaking, when you go to get pre-approved, they want to see at least the last 2 years of your tax returns. Um, but if you have not filed at all, let's say, since you've had a business or whatever the case may be, IRS has a requirement of filing the last 6 years of tax return. And we saw a big influx of that because of the economic stimulus payment. So it brought a lot of people from out of hiding to deal with their tax situation so they can qualify for that or apply for unemployment. And so we found our practice working with many of them self-employed individuals having to go back and file 6 years of tax return from 2014 through 2019. But your loan officer will likely want to see the last 2 years of your tax return. One of the biggest challenges that business owners face with purchasing is that they have inefficient business income reported on their tax return. And the lending is actually based on your net income and not your gross income.
Yep.
So if you're a contractor and I see Shawanda nodding her head, like if you have a 1099 and you made 100,000, that's not what your lender is going to be looking at. They're going to be looking at that 1099 income less the expenses. And then, as most business owners would like to have it, is to reduce that amount of net income on their tax return, because that would yield lower amount of taxes to be paid. So that's why I go back to the timing of the purchase, that you do want to give yourself the 12 to 24 months so you can gradually go into a place where you're showing higher net profit and preparing to pay these higher amounts of taxes. Unfortunately, I've heard horror stories in the past, and Shawanda, you may have experienced this too, where a business owner is so gung-ho about purchasing their home that they're willing to show a high amount of income, not preparing to pay the tax. They get the home, but then they're sitting with a $50,000, $60,000, $70,000 tax bill. And then their notion is, well, I'm just going to go back and amend that tax return. Unfortunately, IRS does know that schematic, and that is considered fraud when you are taking the position that you're intentionally filing a grossed up tax return, which is inaccurate with the presumption of being able to acquire an asset. So there are ways to get around that. And so having a strategy in place to give yourself time to show the necessary income and to pay whatever taxes that may be due is crucial. I'll just take a pause right here and see, Shawanda, if you wanted to make a comment about that.
Yeah, so I've definitely had several people come to me like, oh, I make X amount of dollars. And so that's again why this was so important. I make $200,000, $300,000. I should be able to get whatever house I want, this, and this. And then, well, you've made $200,000. However, you have written off 190,000 of the 200,000. So you will qualify based on a $10,000 house, and that's not much house. So that's why it was also important to do this too, because it's like, yes, you make the money, but yes, you've written it off, and it doesn't go in hand when you're looking to buy a house. So yeah, definitely that's a really important piece.
Yeah. And some of the two of the big ways that I help clients in terms of putting them in a position to acquire real estate and also pay the least amount of taxes is looking at one, the entity structure. So if they're a sole proprietorship or whether they're a single member or multi-member LLC, we may look at incorporating the business as a S corporation or converting that LLC to a S corporation, because it's the amount of taxes you ultimately pay under a S corporation setting or structure is much less than a sole proprietor would, or single member LLC or multi-member LLC. And given the fact that, the limited time that we have on this webinar to going through the differences and the reasons why, I will leave it at that. But that has helped tremendously, with clients looking at converting or incorporating, and they're paying a lower percentage in taxes while showing a higher amount of net income. The other way that we're able to largely help clients be in a place where they can maximize their tax savings while still being bankable to their lender is capital expenditures. So, for example, I have a client that does construction highway services through the government and some contractors. So they buy large equipments and they buy autos, and they knew that they wanted to begin purchasing real estate in the next few years, or in at least the next 12 to 24 months. So the game plan was that they would go in and purchase a bunch of assets in 2019. And so I'm thinking off the top of my head, they may have made $2 million, and their net income was about 800 or 700,000. But because they acquired 400 or 500,000 in equipment and vehicles, we were able to write that off, which then left them with a net taxable income of like 100 to 200,000. Well, you may say, well, how is that helping them if the capital expenditures is bringing down the net income? Well, for lending purposes, they actually add back these types of expenses. When you take capital expenditures, it's on the tax return, it's an expense called depreciation. So the three things that lenders typically add back is depreciation expense. So this $400,000 tax deduction got added back. So they actually had net income of 600,000 to go out there, but they only pay taxes on 200,000. So that's one of the three things that lenders add back to come to your net business income. The second is your home office deduction. So if you're doing a Schedule C and you take the simplified method, or you're doing the Form 8829, they tend to add that back. And your mileage, any mileage deduction on a Schedule C, they will add back to get to a higher net income. So, and then the last thing to mention on this slide is the tax compliance piece. If you're in a position where you're netting income and you're likely to have a tax liability of over $1,000, and if you're unsure if you're going to have a liability of $1,000, you can sit with a tax preparer or CPA and actually do projections during the year to determine that. Your lender is going to want to see that you are making estimated tax payments, which is generally done quarterly throughout the year, and they may request documents. I'm not saying this is a deal breaker. Some lenders are, a lot of lenders, I should say, are lenient about that. But you do have some lenders that are looking for the business owners to be making tax estimated payments if it's required. And as far as the tax debt, there are different avenues for dealing with tax debt. So meaning that just because you owe IRS or you owe state, it doesn't mean that you'll never be able to purchase a home or anything like that. As long as you're in a position where you can maybe set up a payment plan, or talk with the state or IRS, what is called CNC status, which stands for currently non-collectible, that you're not in a position to pay right now. And then OIC means offering compromise, where you're taking the position to say, yes, I owe you X amount, but in reality, I can only, in all likelihood, the government can only get X amount. Then you may be able to do an offering compromise. And on to my last slide. That was a lot.
Yes, that was a lot, but it's good stuff that people really need to know in order to get where they want to be.
And I do see in the chat that someone asked, can you get a loan if you have IRS? And absolutely. And I'm gonna also comment more on this. So how do we get, in a place where we can be pre-approved, go through our home buying process, and actually go to the closing table? At a minimum, what I know, this is what you want. You want to have the last 2 years of your tax return filed, your personal and your business, and all the source documents. So you can be a business owner and have W-2 income, like you're still full-time working. Though all the source documents that you use to prepare your taxes, you want to have that along with those 2 years. You want to have your prior year and your current year financials. And those particular statements that your lender would be looking for is the profit and loss statement or income statement. They both really show the same thing, which is your total revenues that your business generated, less the expenses for that particular period of time. And although I'm mentioning like this is a one-time thing, as Shawanda said, that your lender throughout the process, you're going to need to be providing all kinds of types of information. And it could be by the end of getting to the closing table, you may have sent them 6 different updated profit and loss statements. Mm-hmm. But at a minimum, for going in to get pre-approved, you want to have the current year as well as the prior year. And then the balance sheet is just nothing more than stating what are the business assets, bank accounts, receivable, less any liabilities, business loans, credit card debt, and the equity and that's what the balance sheet normally gives you. The list of the accounting softwares that I mentioned, generally will give you the ability to easily print out these types of financials. So you don't have to, bring in a separate platform to do that. Some of the financials supporting documents that you want to have, I just want to honor the time. We have 1 more minute, and I'll probably need about 2 more minutes, and we did want to open it up to Q&A. So hopefully, we hope that you're able to stay with us a little after the hour, but if not, we can share our contact information if you want to get to us later. So with the financial supporting documents, you want to have your bank statements, your credit card statement, any business and auto loan statements, as well as insurance statements and policies on hand. And if you're issuing 1099s to, contractors or subcontractors, or you're processing payroll, you want to have those reports readily available. And lastly, if you owe IRS any or state any type of debt, as long as you're on an established payment plan and you've made the payments for consistently of at least 3 months, then lenders typically will not have a problem with pre-approving you if you have that payment plan established. So that concludes my session in terms of the finance and taxes for getting to a place where you can purchase your home as a self-employed professional. I'm just going to jump quickly to that next slide. And I do see my contact information copied with yours, Shawanda. So in the chat, I went ahead and put my office number in the chat.
Oh, okay. I see. No problem. Yeah. So, yep. So, yes. So definitely, now does anyone have any questions that they would like to ask at this time, of either me or Amani? Don't be shy. You're business owners. I know you aren't shy people.
So I just want to say something. I just went through all of this past like couple of months, and Miss Amani got me to where I am. I just bought my house. I just closed last week. I'm in it right now. I'm a business owner. I got a lot of moving parts, so many. So she's definitely, she helped me out. It was a process, like she said, she was signing documents saying yes to this, approving that, doing that, going back and forth like a million times, but it worked out in the end. And yeah, everything that you listed not to do, don't do it. Like, I really mean it. Like everything that Shawanda, that you put on that list of things not to do is 100% accurate.
George, I think, George, you had a situation where you, if you don't mind, me sharing, like there was something you did, and they were like, Amani, like the very next day they called me and was like, did you just go and purchase something? It was during your process.
Yeah, they double checked everything, and I think up to the last hour before closing, they asked Amani for another document, and I was like, an hour. I was like getting out of the shower, ready to go to closing, and it was literally like they asked me for documents. So yeah, you just gotta be prepared. It's a lot, but it's doable, right?
Yep, definitely doable, and definitely don't do anything until you signed all of your paperwork.
Yeah.
And after that, have at it.
Do it. Oh yeah, now I'm ready to go. Now I'm like, all right, it's behind me. Once you get those keys, it's good. And yeah, I appreciate she really helped me, and that's why I came here today, just to see what add on to whatever advice that she's already given me, and find out about you guys as well. So
perfect. So thank you for sharing your story, because it's definitely helpful. And what now, because we have shared a lot of information in a short amount of time, definitely feel free to reach out and set up your own personal time to speak, because I know a lot of people don't want to, talk on the Zoom. So I get that. But if you have additional questions that were not answered, and then tomorrow, if you have any I forgot, definitely reach out. And if you certainly, if you know other business owners that could definitely use this information, please send them our way. We are all both on social media, so you should be able to find us. And again, our contact information is here. And you can also reach out whenever you feel the need and share the information, because that's the only way that everybody gets ahead, is that we share this information, so that when your friend who's also a business owner is ready to do it, you say, hey, I know this person, and they can help you get where you need to be. So we definitely must share information when we know better, when we know what to do. That's the only way we can prosper. So that's all. If there aren't any questions for us, we will give you back the rest of your evening. Any questions? Anybody want to say anything? It's like, no. Thank you guys for tuning in, and thank you, Amani, for taking your time and giving us that great information. And I will be talking to you soon, of course.
Sounds good. Thank you, everyone, for tuning in, and you have a wonderful rest of your day as well. Thank you for having me, Shawanda.
All right. I appreciate you. I appreciate you. Thank you.
You're welcome.
All right. Have a good evening. Good night, everyone. All right.